Welcome to the show. This is Trading with Livevol. My name is Stefan, and this is where I trade my real Reg T account. And I use LVX to trade so you guys can see how I trade. I got some comments that maybe might be good to be kind of a little more interactive while I'm doing this show for those of you guys who happen to watch it live, even though really nobody really watches it live, but if that happens in the future, I think what you guys can do is you guys can actually join the community.livevol.com. So go to community, Livevol community, sign in, and then go to the chat part of the community, and then you can chat me here on maybe maybe some stocks to look at. So I have another screen next to me. I can look at it and basically comment on maybe some of the stocks that you're looking at, or maybe comment on some of the things that I say that might not be as clear. So let's go to my account. So I'm actually having a pretty good day, first one in a while. So it still doesn't come close to kind of getting everything back, but it's a good step. So the two things I did well today was on Apple, and then Facebook. So I'll actually cover those two because they pretty much were the most important stuff. So in Facebook yesterday, if you guys saw me on Trading with Livevol, it had earnings coming up, and I didn't really think it was going to move too much, so I did this trade right here. So I pulled it up, yesterday's trade. So I sold a 5-lot strangle for basically, looks like for 655 because I didn't think it was going to move. And it's a 62.65 strangle, and it stayed right here. So I closed it this morning, but I wanted to kind of show you guys something. So I know when you guys do back tests, it's like, oh yeah, I did this trade and then it made money, blah blah blah. But what they don't tell you is what happens, after you do it. So I did this strangle, right? Then basically this morning I come in. I'm gonna show you the tick chart, right? So this is where it ended yesterday. It starts here and then boom, it starts selling off, right? Like just starts selling off like crazy. And originally when I actually started, I was up, I think this morning like $1,100, right? $1,100, and then basically it got down to like $5 because it went down like this. So these puts were like in the money by, let me see. Right, so it got down below 60, so they were in the money by 250. So they got to a pretty high point. Let me actually see what the high was actually. Yeah, 425. So it got up to 425. So I didn't want to lose everything, so I started covering. So I want to at least keep 500. So I bought these back, the strangle, just to lock in like $600, right? So that's basically what I did. So even though, maybe I should have said, hey, my whole strategy is like I'm just going to leave it for a day. But sometimes it's tough to do when the stock does this kind of stuff, right? So when you guys do like your back testing versus or paper trading versus real trading, this is why like real trading is completely different, because you're actually going through this loss, right? So 1,000, 100, 1,000. 900, 800, 700, 600, 500, and it's like escalating. When stuff like that happens, it actually like messes with your head a little bit, right? So especially because I was so happy that I made the right call and sold a strangle, and it did almost exactly what I thought it should do, right? So I felt like I made a good call, and I could end up not making any money because for whatever reason it was selling off like that, right? So it's one of those things that's not clear cut. Sometimes you just let it ride. and it bounces back. Sometimes you let it ride and it just keeps going down and you end up actually losing on the trade, even though you could have just locked it in the morning for $1,000 profit, right? But whatever the case, basically that's what happened to me. I locked in like 600, pretty much at the bottom, right? So if you can see it, I pretty much locked it in like right around here. I think right around here. And then basically I had another sell, and then it started bouncing back, right? So while it was bouncing back, and it didn't look like it was just going to go down to 55 bucks, basically I sold these puts that I originally was short. I bought them back for like 390. Let me actually tell you the trades I have. So so these puts, right? So you see how I bought them for 395? They were high of 420. So I pretty much bought them back at the high. And then as it was recovering, I sold it back out for 321, right? So I bought it, I sold it back out. So that's why I'm short 3 here, right? So originally I was short 5. I bought 5 back. And then as it was going back, I sold 3. And then I had this idea of this original trade that this guy did, right? So this guy did the SEP 65, May 65 call spread, and he paid 355. And this was before earnings. I really liked it. It's actually what prompted that order flow is what prompted me to sell that strangle, right? So what I was thinking was, yeah, I like that trade, so I'd like to do more, right? But these May 65 really got crushed, right? So I kind of bought these, the SEP 65s for 554 2 times. So I'm gonna hedge them by selling these. I just don't know exactly when. I was trying to sell them for $2. They got up to 180, but basically, you know, so far, you know, I'm not getting filled. So let's see if you see this Facebook, you see how I'm working at 199 2 lot. Not sure if I'm going to get filled today. Most likely not. But the reason I was okay with, you know, I was kind of like thinking like, hey, this might actually run a little higher. I don't know what kind of trading I can do. So I was thinking about it, and then this trade came in. So some person did this May 17, you see this time, 9:43, May 62.5, May 70, 1/2 call spread. So they bought 1 May 62.5 calls and sold 1 May 70 calls, right, as a spread, and basically did that 3,000 by 6,000, and essentially he bought it for 148. Now, I know for those of you guys who know the software or kind of know what I'm talking about, you see this green? This is actually a buy. So you might say, like, Stefan, what's going on? I thought if it's trade on the offer, that's a buy, not a sell, right? But if you couple it with this, you see how out of price range this is? So whatever happened, when they decided to cross this trade on Philex, basically while they crossed it, the stock was moving so much that by the time they printed it, these prices changed already, right? So it was probably during, like, was it like 9:43? So 9:43 is right here, right? You see how, like, there was like some massive movements going on in the stock price. So even though they crossed it, by the time the broker went and tried to ticket it up and print it, basically it was already out of the price range, right? That's how fast the stock was moving. And so after doing more research, figured that this was a buy and this was a sell, because the combined price of 148 kind of fits this. So imagine you bought 1 and sold 2 of these. That's 66 cents. That's 134, 140, right? So the fair value is 140, even at this point of buying and selling. So probably what he did was he probably paid more and bought it, right? So that's what I'm thinking. Maybe I'm wrong, and they could have sold it. If so, then you know, then I'm wrong. but I think he did the 1x2, buying 162 and selling 70, and I like it because basically what he's saying is that he wants his chance of this Facebook going up to 70 by end of May expiration, but he doesn't think it's gonna go that much higher, right? So he thinks like his break even is what, 60, what was it, 62 and a half? So it's like 64 roughly, and then he has $6 of upside if it goes higher. So I like that. So I did a 2x4. I did it for a slightly better price. Let's see what price I did it for. 49 cents on the calls and 243 on the 62s, right? So that's a 98. So I did it for 145, 3 cents better. I did this, and now I'm just waiting to sell this, and I think I'm gonna keep this. So the reason also why I like this 65 spread more now after earnings than before is I feel like maybe the downside is more defined. So let me actually go to this chart here. So if you look at Facebook, right, basically I think after that report, people come in and buy the stock between 55 and 57 and a half if it sells off. So I feel like for at least now with the current state of the economy and everything like that, barring something else happening or the economy changing, et cetera, because it's very fluid. But given the conditions now, I feel like this is kind of where people come in and buy. So people who aren't buying it now, I think they will kind of step in around the 55, 57 and a half range and start buying Facebook, like institutions, right? So that's kind of my premise. If I think that's the premise, then but I don't think it's going to go up just because I see all the other beta stocks getting pummeled. So maybe it might take 6 months, 4 or 5 months for it to like kind of hang out here. There might be a decent chance. So my thinking behind this is I would like to do the spread more and then just keep rolling the spread, right? So what am I talking by that? So you see how it's May right now, right? But eventually, once that rolls off, I can sell the June 65s. You see how this is like 270? And then I'll sell the July 65s, right? So this might go down. So every month it might be like between $1.50 and $2 if the stock stays exactly here. And what will happen is by September I would own this thing for free because currently I paid $3.55 for this spread, and then if I let's say I try to hedge it now, $5.55 versus 144. Yeah, so it'll be like $4, slightly over $4 is what I would be paying. So I'm kind of that's my premise. So I'm keeping that kind of logic, and that's what I want to do going forward with Facebook, because I kind of want to stay in it because I'm biased to the long side, right? And it's purely because I like Zuckerberg in terms of his, I guess his like instincts and his ability to grow, and he's young, right? So he's hungry. So even though he's accomplished a lot, I feel like he wants to kind of like go after everything in the world. So he probably wants to challenge Google next, right? So if that's the case, I'm kind of like, I think he's gonna keep growing, figure out more ways to generate revenue and come out with new ideas. Oh, so I'll actually talk about this in a moment. So that's why. That's why I like it. So I'm going to do that roll because I think the beta stocks are going to get slammed anytime it goes higher because of all the sentiment. And so the upside is kind of capped for maybe a short time. That whole adage, sell in May and go away idea, that could actually happen this year. as well. So yeah, so I'm just gonna keep rolling, and hopefully I get the September's for free, right? So basically, to sum it up in Facebook, I sold the 6267 strangle, right, for 655 5 times. The reason I did that was because this person did this spread, the SEP 65, May 65, he bought it and sold those, which made it seem like Facebook wasn't really going to move in May even after earnings. That kind of got me investigating the stock more, and I realized this guy was right. And I was actually thinking that's what's going to happen, that Facebook wasn't going to move too much in May, and basically it might actually be around until September and kind of stagnate and consolidate. So it made sense that I like this trade, right? So basically that trade generated this strangle because I was doing the math and the strangle was, in my opinion, too high if my assumption was that Facebook wasn't going to move as much as it did in the past. So I put that on, and then this morning, basically this person did this 1 by 2, so I piggybacked it. And also I'm trying to put on more of this spread, right? So for what price, I don't know. I might have to leg it for a few days, which is always risky, but you know, sometimes I do that. So that's where I'm at right now with Facebook. Okay, let's go with Apple. So this one was another one that had earnings, right? So if you guys know, I've been yapping about Apple since February, pretty much. And you know, I was saying, hey, Apple was in this consolidation period. And it was what? Sorry. All right. So basically, I was talking about how this was consolidating for about a year, and I was thinking, where is it going to break out, right? So let me actually look at the weeklies. It might be a little easier, right? So it was doing this, and then basically it was getting really tight, right? And then it was going to break out either to the upside or the downside, and I was betting to the upside, and I was like buying some calls, but whatever it was, I lost quite a bit this whole time because I was waiting for this move to happen. I really didn't think it was going to happen after earnings. Otherwise, I would have just did everything for the earnings play. I actually thought it was going to jump up before earnings, but it never happened. In fact, I was just losing. But I did have this position on just from the spread. So first of all, why did I do these spreads? For those of you who don't know, I like doing spreads where this is like a pseudo buy right? So what I mean by that is when I put these on, I could, if Apple stayed around the same price, I was gonna make like 85% return on my money, right? If it went up, I would make 85%. If it stayed the same, I would make 85%. And if it went down, I would probably cap out my losses around 60%, right? So that was kind of my whole premise of it, right? So now that news is out, one of the ways you can lock it in is just kind of get out or buy this. But I don't think right now Apple's going to go back down to 540. I could be wrong. It could maybe go down back there like in, you know, after a few weeks, right? So, you know, you see how like it had this pop, and then basically gradually it went back down to where it actually had that pop. So maybe this could be the same situation. It can go back down to 540 in the next couple of months. You never know. But I generally, you know, for now, I'm not going to think about closing it. I'm just going to keep it. As you guys can see, let me actually show the risk chart right here. So, you know, I made 3,700, and then whatever I buy those puts for is what I can make going forward, right? So this is my chart, and this is what I have left remaining. So So that's what I'm thinking of doing. One of the things that I do like about Apple, and I started looking at some others. So not right now, but let's say Apple kind of, let's say it kind of consolidates, maybe goes down a little bit, and let's say like it's fine some kind of um, kind of like consolidation on the downside, right? Or maybe it just keeps ripping up, but who knows? But if you look at some of these options, so the ones that I'm talking about would be like if I want to do these kind of spreads. So you see how this is like 567. So let's say I want to do like 540, and I'm just picking this so I could actually change 540, and I'll sell the 570, right? So it's a $30 spread, and you see how the thing is about 15 bucks. So you can put up $1,500 and make $1,500 if Apple stays roughly right around here, right? Actually, let me actually use 65 because that's actually already in the money, right? So let me use like 530 complex, 530, 565, right? So you're selling the at the money and buying the 530. So it's a $35 spread, and you're paying like 19 bucks, and you can make, maybe 16 bucks, right? So, what is that? That's let me see, 16 divided by 19. Yeah, so about 85% return on your money, and you're risking $19, right? So you can actually formulate any kind of strategy, and you will make money if Apple stays 565 or higher. You will actually make 85% return on your money. That's pretty good. So like if you find a stock that you're maybe you have a long-term bullish outlook, right? And when I say long-term, I'm not talking about like years. I'm talking about like within a year, let's say, right? Let's say by the end of the year, kind of thinking. These kind of strategies, I think, is really good. I've never really implemented too many of them while I was down on the floor, but I'm kind of liking them more and more, just because you actually know exactly what your return is going to be if you're correct, know exactly what you're risking, and then the time frame you're actually risking those for. So I'm actually definitely going to look for more call spreads to do in Apple. I'm not sure if I want to do like, do I want to go all the way out to October, or do I want to start looking at something like June, right? Maybe I want to do the June like 540. Let me pull up the complex. Maybe I want to do the June 540, 565, which is a $25 spread, and that, there you go. I'll make 66% return, and this is by June if Apple stays at 565 or higher, right? So there's a lot of options. I'm kind of just looking at it, but that's what I'm thinking of doing. Okay, so I know the prior day I did 2 earnings plays. One was Hawaiian Holdings, and I sold this at 85 cents. And what you guys saw was I just got filled buying it back for 15. I don't need to buy it back, but just my margin, like I can't do any more trades unless I start buying stuff back, right? So to cover my margin, I did that. Normally I wouldn't really buy it back for like, at least a week or something, or unless I can get it for a dime or something, but or less. But for now, like, it's kind of what I have to do, so I did it. I also did this IGT, which didn't turn out because I did this spread for 35 cents. So I invested like 140 bucks, and that pretty much went to zero. But luckily, the ones I did trade bigger worked out for me. So I did this because I liked, I just basically generally like the airlines, and when I looked at Hawaiian Airlines, it kind of made sense. So one of the things is you know, usually when I start hearing about it on CNBC, I kind of kill it. And just before I got on, somebody was touting Hawaiian Holdings. So to me, it even made more sense to just get out, right? The other one I have is Micron. I want to talk to you guys a little bit. So in Micron, I have these calls that I bought, right? So I bought these calls for 287 because somebody bought 10,000 of them. So I piggybacked this trade because the vol was at 10%, and I was generally bullish. So this was actually a good way to trade. So now it's kind of gone up substantially, right? So I've actually made more than 100% return on this in literally who knows how many days? Like not too many. 1, 2, 3, 4, 5, 6, like 8, 9 trading days, which is pretty spectacular. So now I have to figure out whether I want to keep it or not. This also happened to be on CNBC, so we'll see. But at least in this one, Kramer was saying you should take some off the table, which makes me think like maybe not everyone is bullish yet in Micron, right? Which makes me feel a little better. And one of the other things I want to take note is the reason I'm not so inclined to pull it off as fast is you see how Micron stock usually moves. It kind of rides this Bollinger Band up when it starts going up, right? So it's not like it goes up, down, and then up, down, up, down. Like usually once it actually makes the real move to go up, at least in the past, like, you know, let's say a year and a half or so, once it decides to take the next step up, it just rides this thing up for a while. So you see how it's only been riding it for about 4 days, and my thinking is I'll probably ride it for a little bit longer, right? So that's kind of why, but I wouldn't, you know, right now I wouldn't mind just taking it off, but I would like to do something where I'm still bullish, right? But I'm not sure what. So I was like, I'm constantly looking at the order flow, and you see how like people are still buying calls, like they're still loading up, right? So I look at the stats, see how the percentile is now 14%, so it's kind of creeping up, even though the stock has been going up, right? So like, you know, I bought it around here, and now, you know, it's actually like creeped up a little bit, and usually it should go really down a lot. So this red line should have gotten straight down, but it really hasn't gone down. It actually is going the other way, probably because people are loading up on options, and now, you know, and they've been correct, right? So, so again, you see 101,000 of the 169,000 calls being traded on the offer. 54,000, a whopping half of those options that are traded on the offer are 5% out of the money. So like, as long as I see like this kind of crazy order flow that's like really bullish, I'm not as inclined to just take it off, right? And then I see this kind of trade. Now I don't know which trade this is because I don't know if the guy was buying the spread or selling the spread, right? If I was bullish, maybe I would think like he was, well, you know, it depends because it depends on the time frame, right? But whatever the reason, basically, people tend to be, you know, it's bullish trade. The one that actually did kind of speak out to me is this 1140 spread, right? This October 30, 35 call spread, and he did a 1 by 1.5. So even though it's 166 and 63 cents, it's actually like 94. So he did this trade for 70 cents, and he has a chance to make up to $5 on the whole trade. And so what I like about it is, you know, he's giving up the 35. So what he's saying is like, yeah, it's going to keep going up. Let me actually go monthly because it's pretty, right? So it's keep going up, but he doesn't think it's going to go up beyond 35 by October. So I kind of like that trade. So I was kind of looking at it saying like, hey, if once I get off of this trade, maybe I should do some trade like that where I do a 1/2, right? So just so you guys know, I did not come out, I'm bullish, but I did not come up with the idea of 1/2, right? I saw this trade go up 1/2, and I start going, October 1/2, 30, 35 call spread, with 35 being where you sell 2, makes sense, right? So that's kind of, so now I have that in my head, right? Because I know this guy did that trade, right? So I know this guy did this trade, 2,000 by 3,000, right? So his thinking is he's essentially, in his mind, he's essentially buying the OCC30 calls for 70 cents, and he doesn't think it's going to go too much higher than 35. And basically, he really doesn't start losing money until it gets beyond 40, right? So unless, in short of like Micron really kind of getting taken over, probably he's looking pretty good. Plus, like as it approaches October, if it's near, if it's like in the 35 range, he's also getting the decay on top of that. So, you know, he's risking not that much. He's selling 1.5 versus buying 2. Now, if he really thought that it wasn't going to go any higher, he might have sold 2 of them. Oh yeah, he only sold 1.5. So he actually won't. He will actually start losing at 42.5, not 40. Sorry, because it's not 2 to 1. Now, if it's 2 to 1, you'll start losing 40. 2 to 1 actually might not be too bad, because it'll reduce this to even lower price, right? So if you can do this at midpoint, 128, yeah, it'll basically cost you almost 40 cents to put that on. Depends on how you like your risk, but generally what I'm thinking on this whole Micron is I'm gonna ride these calls still. At some point I'm gonna get off it, but I'm gonna ride these calls, the May 20s. Essentially, I only have basically 3 weeks to ride them, really, maybe 4 if you're counting this week. But basically, I'm gonna have 3.5 weeks to ride it max. Once I get off it, then maybe the next one I should try to get into is some kind of ratio spread, right? But we'll see how that goes. But that would be my alternative to putting it on. So let me actually see. So that's Micron. Not sure if I have anything else. I think that pretty much covers most of it. I'll be on in a little bit to do the earnings. So for those of you guys who don't know, I'm actually doing usually 2 recordings per day. One is going to be the earnings report, and it's going to be about the stocks that have upcoming earnings, right? So this is like what I trade, which I trade a lot of earnings, as you guys can see. But I will talk about all the earnings stuff, and then if you go to the community site, this video will be on the bottom. So the first video on the bottom, below the video blog, and then I'll have the earnings blog up there, which will have earnings report. So we got some big ones: Amazon, Baidu, Microsoft, Pandora, looks like Visa, Newmont, Ford, Starbucks. Just a few for me that's interesting, and I'll go over it, and I'll be with you guys in about 10-15 minutes. But other than that, I hope you guys have good trading. I'm kind of learning as it goes. I'm still learning. Hopefully this kind of like following the order flow and then doing the analysis is kind of working out so far for me since I hit the bottom. So I'm going to try to keep doing it. But today I had a pretty good day with Apple, and so hopefully that continues. Other than that, hope your trading goes well, and I'll talk to you guys tomorrow. And by the way, if you guys want to try Livevol X trial, go to livevol.com and read about us in Barron's, and then you can try. Also, go to the community site. You can now log in. I'm on 10 o'clock every day, so you can actually log into chat, and I have my other screen on the other side, so I'll be able to see what you guys are writing there, and then so at that time you can kind of ask me some questions or say, Steph, I don't know what the hell you're talking about. But as you can see, I use like Yahoo, FinViz, stock charts. So I use a lot of other software and website as well as LVX to trade, and my whole premise is like I want to make money, so I want to use the best stuff out there. And to me, in terms of equity options, there's nothing out there that's better than LVX. So I'll talk to you guys in about 15 minutes. Take care.